This is the Share Data Futures Energy Daily Dashboard COT slide video. The COT slide can be accessed on the dashboard from the button in the top right of the dashboard. COT standing for Commitment of Traders. This is the data that is provided on a weekly basis from the Commodity Futures Trading Commission on the Commitment of Traders report. This data in particular is the managed money or the leveraged capital data. On the far left is the data slider. This can be toggled to any specific data period going back to the beginning of the database, which is 2016. And the next in the middle, what we see is the market again, the four NYMEX benchmark contracts: heating oil, WTI crude, RBOB gasoline, and the Henry Hub natural gas contract. In the top right, we see a chart that provides the managed money net position and the open interest position. This allows a user to gain insight into the leveraging or deleveraging within the contract itself and the participation within the leveraging and deleveraging of the managed money. Managed money being the large pools of capital, hedge funds, and others who typically have reasonably short time frames in their investment objectives. In early 2020, we can see that there was an increase in leveraging as the open interest increased substantially into April of 2020. And the managed money participated in this leveraging by increasing their net long position from around 96,000 contracts to 380,000 contracts. On the left side, we can see managed money COT weekly pie chart. This gives you a view of the percentage of the managed money long posture versus the managed money short posture in an easy visualization. Below, we see a table of the key metrics: total open interest for the contract, the managed money long position, the managed money short position, and then the net position between the long and short. Below is the managed money long-short ratio. In the middle, we see the long-short ratio chart. This chart allows users to quickly see when the long-short ratio has reached levels of extreme optimism or extreme pessimism. In the case of 2018 here in July, we can see that the managed money long-short ratio had reached approximately 26 to 1. So 26 to 1 long posturing to the short posturing. This is usually indicative of herding, and it usually implies that we are at or near a potential price extreme in the underlying derivative. Below, we can see the managed money net long position as a percentage of open interest. Often when there is low participation as a percentage of total open interest by leveraged capital, that is indicates a potential area of low activity and no trend. When the leveraged capital becomes over a 12% or so percentage level, that often implies that managed money is heavily involved in the contract, and it usually implies that there is little further they can add into the contract. This can indicate, along with the long-short ratio, areas of exhaustion, if you will, within leveraged capital. Finally, we have the price chart on the bottom right, reflecting both the managed money net position, the managed money short position, and the price close for the underlying contract. We can clearly see the relationship between the net position in the case of WTI crude, that when the managed money is in a deleveraging and removing of their long position, this tends to have an effect on the price. In other words, when they are reducing positions, this is usually when we see downward movement in the contract. When they have very low net long positions with a concurrent large short position, that's often an area where a bottom will form, such as in December 2018, October of 19, and finally in March of 2020, while the price did extend in this particular case due to the asymmetric nature of the event, the COVID-19 event. Nonetheless, the rally ensued, the net long positioning increased, and this aided and exacerbated the price appreciation that we've seen since March of 2020 in this particular case. The consolidation period occurred here in the middle as managed money was reducing their net long posture. And when the net long posture began to rise again at or near the November 2020 U.S. presidential elections, we've subsequently seen another rally phase of significance in the WTI crude. So the leveraged capital is an important metric to follow because of the short duration of their objectives, generally speaking, and the amount of capital and leverage that they can apply to the market in very swift order.